If you're considering annuities, or even if you already own one, there's a key piece of the puzzle you don't want to overlook, and that's the riders. Riders are optional features you can add to an annuity contract to customize it for your personal goals, whether that's protecting loved ones, creating guaranteed income, or covering long-term care costs. Hi, I'm Bud Milligan, CFP professional and financial advisor with Milligan Wealth Management. In this video, I'll break down the different types of annuity riders so you can make informed decisions about what matters most to you. We're going to discuss living benefit riders. We'll talk about death benefit riders, long-term care and chronic illness riders, inflation protection riders, and liquidity and commutation riders. It's a lot of riders, so let's dive right in. Let's start by talking about what annuity riders are. In simple terms, riders are like selecting features on a car. You want a sunroof, heated seats, upgraded safety package. You can pick these things out and it'll add to your cost. They enhance for an annuity your capabilities, often for this additional cost. So let's look at the main types of annuity riders and how they might support your retirement goals. Let's start with the living benefit riders. Now, these are designed to support you or you and your spouse while you're alive, ensuring that you don't outlive your savings. While you may see other versions, there are primarily four types. You'll hear them referred to as GMWB, GLWB, GMAB, and GMIB. But the types are a guaranteed minimum withdrawal benefit, the guaranteed lifetime withdrawal benefit, guaranteed minimum accumulation benefit, and the guaranteed minimum income benefit. Insurance companies have different variations of each of these types, so make sure you ask about and you review the details up front. With that in mind, let's discuss how these different types are typically designed to work. The GMWB, or the Guaranteed Minimum Withdrawal Benefit, lets you withdraw a set percentage of your original principal each year, regardless of the performance of the underlying assets, even if your account balance hits zero. Think of it as your own private pension, stable, predictable income no matter what the market does. While I've seen references that the GMWB can pay out for life, it typically is structured to at least return your original principal. This could be helpful if you are concerned about the value of your investment dropping in a volatile market. For example, if you invest $100,000 in an annuity with a GMWB rider, you'll get a guaranteed payout based on a percent of that $100,000 until you've received the original investment, even if that value drops to $75,000. The GLWB, or the Guaranteed Lifetime Withdrawal Benefit, is one of the more popular living benefit riders, and it's similar to the GMWB, but often includes some growth features like income step-ups if the market performs well. It's great if you want to lock in lifetime income with the potential for it to increase. This means you may have more flexibility and control, allowing you to take predictable or occasional withdrawals while the annuity continues to grow instead of being locked in. It also offers the opportunity for a greater potential death benefit for beneficiaries. Don't forget that these benefits do come with a cost, so make sure you consider how long your time horizon is before you'll need to annuitize. If you have a long time horizon, it may be more beneficial to risk some short-term volatility instead of protecting your income with an annuity. However, if the guaranteed growth features align with your long-term financial goals and objectives, the rider cost may be worth it. The GMAB, or the Guaranteed Minimum Accumulation Benefit, provides a guaranteed payout that's at least worth the dollar amount of the purchase or some percentage of the dollar amount after a specified number of years. This rider offers principal protection and does not require annuitization. Since this rider guarantees a minimum annuity value after a set number of years, for many variable annuity owners, this means they can take as much risk as they want in the underlying investments. However, many annuities do have requirements regarding what that underlying investment can be, often limiting the amount of risk an annuity owner can take, which makes sense. This helps the insurance company manage their risk. These annuity riders often come with a step-up provision where the provider compares the cash value of your annuity to the original purchase. If the current cash value is higher, that value is locked in as the new baseline for the GMAB. The GMIB, or the Guaranteed Minimum Income Benefit Rider, guarantees income once you annuitize, and it's often based on a higher benefit base than your actual account value. Once you annuitize, you essentially lock in the annuity and turn it into an immediate annuity for the rest of the payout. It doesn't typically offer the same flexibility to take withdrawals before annuitizing as the GLWB, so you may lose some control there. You'll often see this on older variable annuities and some fixed indexed annuities. It may be a great option for those planning to delay income and looking for growth with predictability. Now let's talk about death benefit riders. These protect your loved ones by ensuring a legacy, regardless of the market volatility. There's the return of premium rider, which ensures your beneficiaries receive at least what you contributed, even if the market underperforms. The enhanced death benefit may provide your heirs with the greater of your account value or a stepped-up value based on investment performance. That gives you peace of mind for those you love. Healthcare costs can derail even the best retirement plans. These riders offer protection against that risk. Long-term care rider enhances your income payments and sometimes doubles them if you qualify for long-term care. The chronic illness rider lets you access income early or in larger amounts if diagnosed with a qualifying chronic illness. They're a great option if standalone LTC insurance doesn't fit your plan or if you don't qualify for long-term care insurance. The underwriting is often less restrictive since you're putting up a significant amount of the assets used to insure against long-term care needs. Now let's talk about inflation protection. We all know prices rise over time, and this rider helps your income rise with them. It's the cost of living adjustment, or COLA rider, and it increases payments each year based on a fixed percentage or based on inflation indices. This can be a crucial rider to have over a 20 or 30-year retirement horizon. Now let's discuss liquidity and commutation riders. If you're worried annuities mean locking up your money, then these riders give you some flexibility. The commutation rider lets you take a lump sum instead of ongoing payments, often for specific circumstances. Withdrawal flexibility rider gives access to funds, sometimes penalty-free in the case of emergencies. It's like a financial safety valve. As you've seen, there's a rider for nearly every retirement concern: income, longevity, healthcare, inflation, and legacy. But riders do come at a cost, and they come with rules, so it's important to work with someone who understands how each feature aligns with your goals. If you'd like to explore whether annuity riders fit into your retirement strategy, I'd be honored to help you with that. And if you found these insights helpful, please hit that like button and subscribe to my Milligan Wealth YouTube channel for more practical financial guidance. As I mentioned, if you have any questions or want to know more about annuities or other ways to manage your personal financial goals, reach out directly. Go to my website at milliganwealth.com, navigate to the calendar icon on the left of the screen, and schedule an appointment. Until next time, I'm Bud Milligan, your financial bud.